Hi, everyone, and welcome to our annual tax planning session. It's your guide to end of financial year success. So, this is going to be very similar to the last few years. We do this just to help our clients at NAV Wealth feel a bit more at ease leading up to 30 June and help with any tips and traps that experts recommend. So today we've got a panel that will be speaking to you. We've got Simon Prowse, our Director of Tax and Accounting. We've got Hayley Kalms, our Director of Bookkeeping. We've got Hugo Furzer, our Business Services Manager. And they're going to be taking you guys through what you should be doing leading up to 30 June. So I'm going to hand it over to Simon to introduce today and take you through what he's going to be talking about.
Thanks, Jamie. And hi there, guys. It's good to see you again. Hayley, another year's gone past pretty quick. Where did that one go, hey?
I don't know.
And Hugo, the end of the financial year is here and we're all busy as everything. And the compliance program, we're nearly there.
Nearly there. I cannot wait for the end of the year.
Yeah, it's that time to breathe again. Look, most importantly to our clients out there, as we've done in past years and introduced by Jamie, today we're just going to give you a brief overview of tax planning or general planning. And the idea is we're picking the low-hanging fruit in terms of looking at your business and looking at your personal affairs when it comes to the tax man on the 30th of June, which is the end of the financial year and when we report. So today's agenda, we've got a few key points to home in on, a little bit on the ATO and what they're up to this year, what's changing moving forward, the all-important super, of course, and then just general considerations that we're going to touch off to do with business and individuals. And hopefully at the end, with a bit of probing, the guys might share a little bit of their expert tips on the subject matter. So just to lead this off, and it's a pretty common thing we all hear, but I'm going to harp on it again as I do most years, and it's all about the planning. And really, everything we do in life is about planning. We build houses to a plan. We get to a destination with a plan. Everything's about having a guide or an overriding principle about what we're doing. And so too, the end of the financial year. And it's not just the tax planning we're looking at, it's overall business planning. And I like to take this time, and a lot of our clients do as well, in looking at their businesses, their business goals and objectives over the past 12 months, a review, and then looking forward as to what those goals and objectives might be for the next 12 months. So really important to sit back, have a look down on the business, not within it, and look at some planning goals and objectives that you might want to achieve. And so too, tax planning, pretty crucial. And when it comes to that tax planning, if you do it right, it can mean the difference between a fantastic outcome or a situation where you could be paying undue tax to the tax man. So again, a bit of personal and business planning, and then with the tax man in mind, we're going to save ourselves a lot of angst and a lot of time when it comes to the 30th of June.
Thank you, Simon, for taking us through that. And yeah, it is very important to start planning. So, Hugo, can you take us through the ATO's current focus areas?
Sure. Thanks, Jamie. There has been quite a bit of noise around FBT. I think the ATO sees this as a real revenue generator. And I think there's a lot of businesses out there that aren't really reporting the proper amounts of FBT. So that should be an easy win for the ATO.
Yeah, so Hugo, I understand even if you do meet compliance requirements and you don't claim deductions for FBT-able items, the ATO is still wanting an FBT return to be lodged?
They are if there is something that needs to be reported in that return. Even if it turns out to be a nil return, they do want it. It's actually in our favour to lodge those returns because there's a period of 4 years where the ATO can go back for the most recent assessment. Without lodging those returns, they can go back forever.
Yeah, and we're seeing a bit of data matching coming out on the FBT front, yeah?
We are. So, as an example, state governments are now talking to the ATO, and they're reporting any sort of purchase of cars by companies. So we've had a few instances where there has been luxury cars bought by companies and the ATO is aware of it. The ATO is tired of perennial late lodges with business activity statements. So what they're now doing is forcing late lodges from quarterly onto monthly. I guess that's punishment.
Hayley, are you seeing much of this happening out there in the bookkeeping world and with regard to BASs?
Look, I think the ATO is sort of targeting at the moment clients that have no contact with the ATO. So aren't even, deferring or asking for a payment plan or anything like that. So I think they've gone through that sort of a lot of businesses first, but I'm sure they'll head into businesses that do make contact but are continuously late lodging and defaulting on payment plans as well.
So we're going to see a ramp up in this space is probably where the message from the ATO on that one.
Yeah.
I mean, in the last year, the ATO has released guidance on their view of personal services businesses and how profits are allocated out of those entities. Mainly has to do with Part 4A, which is tax avoidance. I imagine there will be review activity. Whenever they give guidance like this, it's usually followed by some kind of clamping down by the ATO. So Simon, tell us about business benchmarking.
Well, yeah, the business benchmarking is interesting too after we get off the PSB, and then we've got to now meet the other ATO scrutiny on benchmarking. And the ATO is actively releasing benchmarking on business industries. So when you're preparing your information for your tax or your accounts, they're suggesting that you take a look at the benchmarks, and if your business is outside those business benchmarking range, you could get a knock on the door from the ATO. So again, Big Brother watching, and another word of warning straight from the tax office.
Thanks, guys. And Hugo, do you mind just taking us through a few things that are changing this year round?
Sure, Jamie. Superannuation guarantee, that's moving from 11.5% up to 12%. And the instant asset write-off, which is $20,000 this year per asset, that will disappear on 1 July. So it's probably worth taking advantage of now. I don't know if it's ever going to come around again.
Isn't that interesting? It's been a very quiet year on the change front. Not a lot coming out of the ATO, Hugo.
Oh, that's right, Tom.
I think we might just pass it off to Hayley now, just to run us through some key dates and tasks.
Yeah, thanks, Jamie. So this is in my world, bookkeeping world, a few things to prepare your accounts, especially if you own a business before 30 June. The first thing to be aware of is superannuation. If you want your super to be deductible in this financial year, it must be paid before 30 June. And generally you need to pay it by, say, between the 15th to the 20th to ensure it clears at the clearinghouse. It is moving from 11.5% to 12%. Now, this is based on the day that you make payment of your payroll. So just say you process your payroll on the 30th of June, you still own and not pay your super until maybe the 26th of July, you still pay your superannuation at the 11.5% rate, not the new 12% rate. So a lot of people have confusion over that. Another thing you could do is with your income and expenses, you can push your income out if you don't want it to, if you want to decrease your profit, and then you could actually prepay expenses. That can help as well. And that helps as well if you're on a cash basis with your not only your profit and loss, but also in your June BAS. Another thing to note is if you've got stock, make sure you do a stock take before 30 June. And also petty cash or a cash till, make sure that's all counted up before you close 30 June if possible, or as close to. Make sure to help out your accountants and to help out your bookkeepers, make sure you get all your bank and credit card statements together as 30 June. So you need to wait till 30 June rolls over. But if you can have all them ready to go, that'll also save your bookkeeper and accountant's time of preparing your final statements. Some other paperwork to get together is if you have purchased any of those assets, make sure you have all the paperwork available so we can ensure we can write off the 20,000 K, or if you've entered into a lease agreement, we'll need those lease schedules as well. And then there's a last one there, reportable. This is the TPA report. Don't forget about that. That's your report for mainly the construction industry, to report on any contractors that you have paid during the financial year. So just make sure you have all that data ready to lodge in by the August due date.
Thanks, Hayley. And do you mind just running us through wages?
Yeah, wages is the first sort of process or reconciliation that we all do at the end of financial year. So you need to finalise your payroll, and what they call now is your final pay event needs to be processed and sent through single touch payroll to the ATO, and that needs to be done by the 14th of July. And this should be done by this date because it helps your employees so then they can actually prepare their tax returns nice and early, which a lot of them do usually want to do.
Hayley, this date for the 14th of July, does that apply to all businesses now?
Yeah, it's all businesses, yes. And it has to be done through STP.
Okay, and that'd tie back into that super accrual and the timing of the payments where they're 11.5 versus 12%.
Thanks so much, Hayley, for running us through all that. And I might just pass it back to Simon to run us through a few business considerations everyone should be looking out for.
Yeah, thank you, Jamie. Look, with anything to do with business and individuals and considerations, please review our checklist. So we're going to be part of this talk. There's a comprehensive list in those checklists, but for the moment, I'll just pick on the high level or the low hanging fruit if you want. So with motor vehicles, remember we've got this electric vehicle, they're FBT exempt. They're going to be FBT exempt for the foreseeable future. So if you've got employees that are looking to get a vehicle, it may be worth looking at salary packaging options because the tax benefits are great. Work-related items for employees, let's make sure we get all those costs in. We've got our reimbursements already and they're registered in our books before the 30th of June. Prepayments, Hayley's briefly mentioned income and expenses and managing those. Again, if you prepay an expense that is a known expense that has a known outcome or a known amount, you can claim the tax deduction this financial year. Asset purchases, of course, Hugo mentioned the $20,000 limit, which is disappearing, and it's back to $1,000. We don't see any change on the horizon there. So if there is plant and equipment or computers or the like that you need to purchase, it's probably worth looking at purchasing those before 30th of June. And then the general stuff, repairs and maintenance costs, bad debts, those bad debts need to be written off or a minute recorded that the debt, you're not going to get the funds, and that those debts need to be written off before the 30th of June. And finally, the big one for all those smaller businesses out there or ones that are controlled a lot by families, that Division 7A. And that means, all those loans that we've taken out through the year that haven't washed through the tax system, we need to consider those or potentially repay them. But it's really big, it's a big bugbear of the ATOs, and generally every year we spend a while cleaning up these loan accounts. So as I said, planning, it's all about the planning, and these are those common items that we can go for in the business consideration.
Thanks, Simon, for taking us through some business considerations. And Simon and Hugo, do you want to now just take us through some individual considerations that people without businesses should be looking at doing to maximise their returns this year?
Sure. Super contributions, deductible super contributions are a great way to sort of minimise tax. You do have to meet a few conditions to be able to do it, but if you haven't used your cap for this current year, you can top that up and make personal contributions or salary sacrifice. If your super balance is under $500,000 and you haven't used prior year caps, you can go back for 5 years and use those contribution caps this financial year. So for those with investment properties, an easy way to come up with some deductions is to obtain a depreciation report from a quantity surveyor. They'll essentially look at your property and work out building and also plant and equipment claims that you can make in your return.
Yeah, Hugo, and also those investment property expenditures, we've got to make sure we pick those all up, identify those insurance costs and everything else we've got to do with running the investment properties. Work-related deductions is an interesting one. It's any expense that you might incur to earn your income. Now, that's probably a very general statement, but if you've incurred a cost that's likely to relate to your business, you may, or your business dealings as an employee or an owner, you're likely to be able to claim those, so it's worth a look. Hugo, talk us about the logs.
Sure, no problem. So there's 2 logs that we need to be aware of. The first one is for people who want to claim motor vehicle, the cents per kilometre method. The ATO now wants a breakdown of how people have come up with the number of kilometres they're claiming in their return. So that would be not quite a logbook, but a diary of what they're doing. The other one would be a home office for those people who are claiming the ATO rate for hours at home. The ATO now wants a diary for the full year of all the hours that they've worked at home per day.
This is pretty crazy, right? Because everyone these days seems to be working at home, Hugo.
That's right. There's a fair bit of work involved in sort of tracking that. Luckily for our clients, we've got 2 schedules that we can give them to make life easy.
Yeah. And then the old travel diary. Well, we've got to make sure when we're traveling interstate or overseas that we keep a bit of a log of what we're doing. It's called a travel diary. Essentially, it's another log to prove our worth and claiming deductions from the ATO. And finally, that bit of low-hanging fruit for all of us out there, those donations we make, those random ones that we do at the office when, there's Jennings for G's Day or big cup of tea. Any money we pledge or put down to a deductible gift recipient over $2 can be claimed in our tax returns. So keep those donation receipts, guys.
Thanks, Hugo and Simon. And just to finish up, I might just get you all just to give a quick tip to help people maximise their tax position coming 30 June this year.
Well, for me, and I'll go first, guys, it's all about that planning. Like, I can't stress it more. Everything we've talked about today is sitting back and having a look and doing a little bit of thought-provoking brain activity and getting ready and planning for the tax man, whether it be I'm going to put some money into super because I want to maximize my contributions, or it's a matter of, I've got to do a logbook. Planning to get it done and then actually doing it are 2 separate steps, but that planning process will get you thinking and it'll get you the best for the end of the financial year.
Thanks, Simon. And might just get a quick tip from you, Hayley.
Yeah, the best tip I can give is just have everything ready. So have all that paperwork in order. Make sure your accounts are as accurate as possible. If you're unsure, that's when you can get us involved and we can help you out. And just be ready with all that information for your bookkeeper and your accountant to go. It's very frustrating from us as well. And it's probably more expensive for you guys if everything is not ready to go at end of financial year.
And Hugo, anything from you?
I would say that accountants' fees are tax deductible, so just make sure that you pay them before 30 June.
Great tip. All right. Well, thank you everyone for joining us today. As you can see on the screen, Simon, Hayley, and Hugo, their email addresses are there if you need to email any of them, or give the office a call on 02 9008 3000 and we'll be able to help you where we can. Thank you.
And thank you, James. And just for those clients out there who we've typically done the tax planning meeting with, rest assured we'll be on to you and talking through and organising a catch-up to guide you through it. And anyone else who out there who would like a tax planning meeting with one of the professionals you see on screen, or for that matter, any of the accountants at NAB Wealth, please feel free to call or email the office and we'll get in touch and organise something with you.